The most common question I'm getting asked online and in person at the moment is property going to boom or bust in the next 12 months? Now, in this video, I really want to get to the nuts and bolts of what's really going on from a high level economic perspective. I want to talk about the positives, the negatives in the current market, and what Simon and myself are actually doing to not just take advantage of this time, but protect ourselves during this time as property investors as well. Super excited today. Sweet, bro. So it's a massively mixed bag at the moment. Depending on who you're reading and who you're listening to is what you're getting. I'm half expecting from the mainstream media, the commentator on TV to turn into like a zombie and start eating the other one at the moment. Feels like the apocalypse according to some of these guys. And then you've got other people like Phil Anderson and Simon Priestley saying it's not that bad. You've got some of the banks saying it's going to be a minus 10% year this year. You've got other banks, which are their direct competition of the big four, saying this market's going to do 10% this year. It's all over the shop. And I think today I'd really like to address what the hell's really going on and what people can expect this year and, you know, what they can expect longer term as well, which we're much more clear on.
Yeah, I think the reality is, you know, based on what everybody's saying, the big banks, Simon Priestley, Phil Anderson, SQM, CoreLogic, almost everybody out there is, we're certainly not going to boom. The property market isn't booming at the moment, but it's not busting either.
No boom.
No boom, no bust either though. So you got to look at both sides of the equation. Now, you certainly have markets like Sydney and Melbourne that are declining at the moment. You look at SQM, they believe that Sydney property prices could come back by about 7%. They believe that property prices in Melbourne could come back by about 8%. But they believe markets like Brisbane could increase by 6%, Perth could increase by about 5%. So there is such a mixed bag going on and we don't know where that's going to end up. But what you're probably going to see is relatively flat property price growth at the national level.
You know, this is the strange thing, man, about Australia not being one market. Like, I know suburbs in Brisbane right now that have gone up by more than $100,000 in the last month. I know other suburbs in Brisbane that I can probably buy a property today cheaper than I could 3 months ago and maybe off market even get something for 50 grand below what it should be worth right now. So even with one capital city, one suburb that's 10Ks in the city versus one that's 19, it is a mixed bag. And I think that's what's massively confusing people at the moment. Like, even when you dropped those potential declines in Sydney and Melbourne, the article from SQM was like between 2 to 8%.
Yeah.
And it's like the media and us as well are just going to grab like the worst case.
Worse, always negative.
You know, but it's like, it's a range and it's a safe range. And it's like when you look at those markets having gone up 130% or 80% each in the last 10 years, a 10% wash off the top makes me sleep better at night. Like,
Absolutely.
It doesn't make you sleep better if you just bought for 200 grand more than you should have because you went to an auction and 30 other people were there in December last year. But it makes you feel really good if you don't want this whole thing to explode in 5 years' time.
And I think this is just reconfirming why we aren't short-term investors. You should never be trying to predict what's going to happen in 3 months, 12 months, 2 years, even 5 years sometimes. For us, it's always about developing that longer term strategy, chipping away over a 15, 20, 30 year period. All things will work out. And what happens in the month to month, in the year to year, doesn't necessarily impact you when you are creating that longer term plan. But let's dive into some of the negative things that we have been hearing for recently, because there's certainly been a lot of that this year.
I'll do the negative because I'm in black today and we'll shoot back to you for the positive. You can be like the angel, I'll be the devil today. So the negatives today at the moment in the current market, as far as I can see, is just the media scaring the absolute shit off people that don't know what they're doing and scaring the shit out of people that do know what they're doing as well. Interest rates are rising and it's not going to be this beautiful tapered, little bit up, we'll wait and see, little bit up. It's going to be boom, boom, boom. And every time it happens, it's like going to feel like the first time it's happened. Like, I don't know what happens, but every month at the moment, we have known for 2 years they're going up. We've known for 6 months that they're going to go up sharply after the election. They're going up sharply, but every month it's like, I didn't expect it. It's like, what do you mean you didn't expect it?
They're going to make their way back to pre-COVID levels.
They're going back to 4%, maybe even 4.5%. And then the beautiful news is, I'll let you share that in the positive side down the line. The cost of living are increasing because of supply chain issues. I think the biggest thing COVID's helped identify is the global supply chain system is massively complicated and horrible when the worst case scenario happens, when labor gets cut short, when materials get cut short, but then there's massive artificially spiked demand. We get into a position where the government has pretty much blown up building prices by 40% by printing all that cash and doing what it did. So, you know, the other thing that sucks at the moment is some markets are declining. And when Sydney and Melbourne are going down, it looks like all of Australia is. But what's interesting is Perth, Adelaide and Brisbane all went up last month. But overall, Australia went down. So the media headline that's grabbed is Australia's declining, everywhere's declining. Put your head in the sand for a year and a half until some smart people make some money again off the decline, and then everyone else comes rushing back in once interest rates start coming back.
And then you've got the stock market, massive declines as well, which is a huge negative. You know, people's portfolios have been absolutely smashed. If you're holding some of those tech stocks, you're down, 40, 50%. A lot of people's super funds are fared down at the moment as well. And that takes a hit to your confidence as well, especially if you're getting closer to retirement.
You know, all of that free and easy money that was made in crypto in the last 2 years has been wiped as well. They're down 80%. Some of those coins are down 95, 99% right now. That's scary. That creates like an illusion of wealth on paper, and then the market washes that paper money away.
Yeah, exactly. Now let's jump into some of the positive things, because as always, there's two sides to every single coin. And, there's a lot of positive news out there. I guess one of the cool things that we've read is Warren Buffett is back in the market. So he came out massively late 2021. He thought the markets were overinflated, overpriced. So he went into a safer position. But after these major declines, he's getting back into the market at the moment, which says a lot. One of the best traders of all time. The other positive is unemployment is at extremely low levels, the lowest levels in over 15 years right now. So a lot of people are earning good money. A lot of people are working at the moment, which is great. We've seen the the minimum wage actually increase as well, which is great to see some positive wage growth there. A lot of the people that we're talking with at the moment in the service industry, we're seeing a lot of increases in wages. Construction industry, massive increases in wages there as well. And I think this is good to talk about, because if you're earning more money, then as these interest rates do come up a little bit, you can afford to pay for the additional interest. Now, the other thing for property investors is rents are on the rise. There is a huge rental crisis in Australia right now. CBA, CoreLogic, Propertyology believe that rents could rise between $100 to $200 per week over the next couple of years. Once again, this is a hedge against those interest rate rises. If your rental income is going up and your interest rates are going up, hopefully there is a little bit of an even balance there. And I think the other good thing is interest rates are coming up. It's a good thing. Like, they can't sit at 0% forever. We can't have 2% interest rates forever. They're naturally going to come up. Last year was a crazy year. It's really hard to operate in a market where the Australian house price has gone up by over 20% in a single year. Brisbane property prices up by over 30% in a single year. That's a lot to deal with. So now these interest rates are coming up. We're seeing a bit of a natural slowing effect in a lot of markets, which makes it more manageable. There's a bit more of an equilibrium between buyer and seller demand at the moment, which is something that we're absolutely loving.
One of the other positives from the likes of your Fred Harrisons, who wrote The Power in the Land, as well as Boom and Bust. And Fred was one of the guys that originally figured out this cycle in Europe and understood that things go up, things go down on a relatively similar pattern, as well as Phil Anderson, who wrote The Secret Life of Real Estate and Banking, is their perspective of how things are tracking are completely on track. Both of them don't see anything that's happened in the last couple of years disrailing what's happened previously. And what both of them have said is that the cycle will continue on. There'll always be bumps and bruises on the way through, but there's been nothing to disrail what they think is coming. The reason for that is they don't believe, whether it's the markets, whether it's personal investors or the biggest companies in the world, are anywhere close to all in right now. People aren't walking down the street everywhere talking about property anymore. They're not talking about stocks anymore. They're not talking about how much money they're making in crypto. There's properties in Australia that are still going up in value. There's some that are coming down. These guys fundamentally believe that while there's still so much money sitting on the sidelines that's been printed or that's been stored away for a rainy day, that we can't be at the top. And that's an exciting thing as well. And what I love about the Australian banking system relative to some of the others in the world is we do pull the handbrake super hard and we do create these mini declines. This is the third one that I've seen in 4 years. 18 was another one, 20 was another one, where they pull the prices back in Sydney and Melbourne, either making money really hard, sentiment really shit, or interest rates one way or the other. And, you know, by cooling markets temporarily like that, like it saves, I think, like massive bust, which other countries in the world have got for a long time. And to be honest with you, I think Australia will get at some point in the next 10 years anyway.
Yeah, and when you look at the banks, you know, they're in a really good position at the moment. Their balance sheets look good. A lot of people are ahead on their mortgage repayments. As interest rates come up, they can earn more money, which is great. And then you look at the Australian government, my gosh, how much money are they spending on infrastructure, on defence, on NDIS programs, on first home owner grants, like all of these amazing things are coming to the market. And, you know, when the government is spending a lot of money, it generally stimulates the economy. It generally provides jobs for the economy as well. And things are great.
Without a doubt, bro. So I think there's two opportunities in this marketplace, I suppose. Now, one of those opportunities is to just get yourself in a really safe position until everything feels good again and then see what you want to do down the line. And for many people, that is a really good option right now. So for those of you doing that, you know, make sure as the interest rates go up, you actually talk to your mortgage broker or your bank about getting better rates. Now, I've got rates at the moment with a number of the big 5 banks in Australia. For the exact same amount of money, one of them's giving me rates right now at 2.39%, even with the adjustments. The other bank's giving me at 3.8. So what have I done? I've called my broker and I've just gone, I can save almost 1.5% by changing, and he's refinancing me to a better rate at the moment with some more assurity around what's to come. Anybody can do that. The other thing that's happened in almost every single capital city and major regional market in Oz is rents have gone up almost $100 in the last year. I talk to people every day where their rent is between $100 and $150 below what it could be right now. So that's another great opportunity. Another thing that Lisa and I have just done is recommitted to a budget. So we've gone, what is our actual fixed position? What are the expenses in our life? How much do we want to put towards lifestyle? And then instead of doing that on the card, my wife's actually getting, I just got my play money this morning for this week, $1 amount out of the bank. So it's fixed and that's all it is. And that's all I can spend on a weekly basis.
Nice.
And those little things can really help in an environment like this. But then there's the other side, which you can talk to, bro, which is, hey, I'm in a safe position. I've got good equity from the last 5 years. I've got a good job, or my salary's just gone up. I've got some savings in the bank. I've got some equity. You know, I actually aren't scared of this at all because I'm investing for the next 20 years and I want to take advantage of markets while they're sentiment-wise at least on the decline right now.
100%. And there is a lot of people out there that are in that position right now. I'm fortunate enough to talk with many of these people every single week that are trying to pick the eyes out of the Australian property market right now to identify where they should be investing their money, because a lot of wealthy people, a lot of people in good positions, they're seeing the cost of living go up. They're seeing this inflation unfold in front of their eyes, and they want to get their cash out of the bank and into the property market because, as Ray Dalio has indicated, property can be a really solid hedge against inflation. So what you need to do if you are in a good situation is obviously always start with, obviously, where are we at right now? And where do we want to be in the future? Because for us, we're long-term investors. We don't worry what happens in a short period of time. We're worried about how can we replace an income over a 15 or a 20-year period. Now, what we've done recently is we've analysed the entire Australian property market. We can clearly see that property prices in Sydney, Melbourne, Hobart, Canberra, Wollongong, Newcastle, Geelong, Mornington Peninsula, even Gold Coast have dramatically outperform most other markets in Australia. So these are the areas that we're avoiding at the moment because we can't see as much potential in the coming years because they've already performed extremely well. So what we're looking at is the markets that have underperformed over the last 10 years that haven't seen much property price growth. There's still suburbs in Brisbane that we're looking at they're only up about 20 to 40% over the last 10 years and have significantly underperformed. There's still really affordable property prices. There's still really strong rental yields. And we're starting to develop a strategy around, okay, well, how can we understand the Brisbane market, the specific suburbs that we should be focusing on to potentially look at expanding our property portfolio?
You know, I love that. I think some of the last thing that I wanted to talk to in prep for this video is some of the things to remember. Now, you've just hit one of them. Like, you know, one of the things that always helps me is like I have a clear vision of my future, and that is being financially free and having choices in my life. The choice to spend the time with the people that I care about, do work that I enjoy, to look after myself, to create a better world than the one that we came into, and to constantly make life better for my children down the line. And one of the ways that I do that is create a really, really simple property strategy. Now, we've got previous videos or podcasts you can look at. One of our ideas is 3 houses to financial freedom, where you simply buy 3 quality houses. Some people are in a position to do that in 1 year. Some people will take 10 years to do that, and then slowly pay off the debt on those properties and use some of the things that we do that not everybody talks about to do that. And then once you've paid them off, you've got the choice to really be that person you want to be. But, you know, for a lot of our clients, they want to go further than that. We've got some clients that are at property 5 that are going to property 10. We've got other clients that have literally just wanted to buy 1 house in the last 7 years with us. And, you know, they've rode that wave and they're doing extremely well, and they've set their retirement off the back of that. So that's one of the things to remember at the moment. The second big one is what Simon said off camera before, and that is it's not all one market. Sydney, Melbourne, Hobart, Canberra have suburbs that are going to be winners in the next 10 years. They've got other suburbs that are a little bit inflated right now versus parts of Brisbane and the Sunshine Coast that are still sitting so beautifully in the context of their bigger, longer term gains. And so if we can start to think about this market objectively, instead of going, is it going to boom or bust? Well, how can I position myself in a suburb that has underperformed to set myself up for not just long-term gains, but medium-term gains as we get towards the Olympics as well?
And I think the last thing is just coming back to remembering that property is a long-term asset. It is amazing when you get a year like 2021 if you are in the market, but it's certainly not what you forecast your future potential on. So just being in it for the long term, you know, leading up to the 2032 Olympic Games up here in Brisbane, the Australian Financial Review believes property prices will double between 2021 and 2032. You know, increase that even further by 15 years and you're in a much safer position. So long-term is always the way to go. And when you are a long-term investor, you don't get as caught up with these short-term changes in the market because they constantly come up. We've been operating for the last 6-7 years, and 3 out of the 7 years, we've seen the market completely change in that quickly.
Absolutely, bro. I think just having a strategy, realizing it's not one market, starting to think long term, and recognizing buying opportunities when they come. Like when all the tech stocks are down 50%, they're either overvalued by 50%, or some of them were actually valued correctly, but the whole market's drawn down because everyone panicked. You know, same with crypto, same with property. Like when prices are down, that is a good opportunity for those of you in a safe position. And we're really only talking to those of you in that position that are safe. And if you're not in that strong position, then slowly get yourself there, pay off some more debt, save some more money, increase your income. Like I've talked to at least 5 clients in the last week whose incomes have all gone up between 5 and 30% in the last 6 weeks. And that's because they're in high paid professions where recruiters have targeted them. Another company's offered them bigger money, and then they've gone back to their existing company and gone, this is what I could get, this is where I'm at right now, and they've all been able to bump their income. Their expenses haven't gone up $1 because most of these people are the same as Simon and I. They're not out there like refinancing everything and buying more shit. They're saving money and they're trying to get financially free. So for those of you who are in that position that really are seriously considering taking advantage of this, and as Simon said, picking the eyes out of the market in the next 3 months to 18 months, we'd love to offer you a one-on-one strategy session. Just jump over to our website, www.pumkedonproperty.com, and book a free session in with either myself or my brother Simon, and we can talk about where you are now, where you'd like to be longer term. We can talk about what's honestly been holding you back from getting to where you want to be in the last 10 years and some strategies for overcoming that. We can talk about your property investment goals and the market, and then you can take all that info like people do every single week for the last 7 years and smash it on your own and give us a text message with a thumbs up and a photo of your property when you do it on your own. Or maybe we choose you as one of the small number of people we work with each month, and we can support you go from where you are to where you want to be safely. And if we can't work with you, or we think it's too risky, or you're not in a great position, we can give you some great places to go and start and smash it on your own as well. But either way, we want the best for you. We want safety for you in this market. And for those small number of people that will take advantage of it in the next year, we want to help you buy below market value while you still can.
Whew, that's a wrap.
That's a wrap.
Have a spin. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.